Ladies and gentlemen, welcome back to the show. How's it going? I want to start off by talking about Solana. It's just been taking a giant dump. Like the Solana network went down earlier today, and it's not at the lows it was, I think, 4 weeks ago, but I think it's gonna make it there. It's just a matter of time. What I want to talk about today is what you should invest in and what type of returns you can expect based off of what you invest in. And I'm only going to cover Bitcoin and Ethereum because the other ones really start falling apart, I feel like. I mean, Solana is just like, wow, like it's kind of, it feels like a dumpster fire to me. And so, I mean, the other ones like ADA maybe still feels like a dumpster fire. And all the other altcoins, I just frankly don't trust completely. But let's just talk about the big ones. Let's talk about Bitcoin. Let's talk about ETH. And maybe if there's interest, we could talk about the other ones. But I'd like to start by congratulating my friend Mustafa. He just got a clone. He picked up this one. It's pretty interesting. Nice little tab there with 3 eyes. It's pretty cool. Good for him. Congrats. Let's dive right in. So let's talk about Bitcoin here. Bitcoin, to start the year, I mean, like when it first launched, from the bottom of the bottom up to the top, you had about a 53-ish, 55-ish. I mean, the numbers are like, depends on where you count it, but it seems like about a 50% up from the bottom. So I rounded down to 50% for my calculation. And for between the market cycle, which went from 2015 to 2017, that was about 9,000, I thought. So I rounded it up to 10,000 roughly, and that's your return. And then this latest cycle, we have it what looks like to be about 2,000, right? Roughly 2,000. So if you plot these numbers out, you start seeing that it's dividing by 5 every time, which is very interesting, right? Like your initial returns is 50,000, and then you divide that by 5 and you get your next bull run, which is 10,000% return. And then you get your next bull run, which is 2,000% return. That's this last one that we just had. Unless something drastically changes, unless we don't go down to the 200-week moving average and the cycle ends. And it's predicted that the next one, so if this is the end of the cycle, that when we hit the red line, that if that represents the end of the cycle, which it might, there are counters to this, like the COVID crash, that was not the end of the cycle. If it was, then we were below 2,000%, right? But if we went from here and to this top was a full market cycle, then 2,000 makes about sense. If we go from the red line here and divide 2,000 by 5 again, we get about 400, and we'll end up at a price of at about 120, 130, something like that. It's plus or minus, 50 odd percentage points. I mean, tens, I suppose, in this case. So these are the returns. This is not a massive return. I mean, if you bought at $20,000, to say it's $20,000, you are leaving with a 5x, which is not bad. It's not like terrible, but it's not like, oh my God, my mouth is watering, like this is wild. Like these previous returns, like a 2,000% isn't bad, and 9,000 was pretty wild. At 52,000, oh boy, that's bonkers. Because you started off at like something really small, you would have just, instantly. I mean, this is where like the Bitcoin millionaires and right here, like a whole bunch were minted. Like less and less are minted each time, obviously, because as the market cap grows of these giant things, like the amount of money required to take it to a new all-time high continues to increase, unless you get like some big giant new player in, and we do actually have like another 2,000% return, which would be wild. But I don't know. We'll have to wait and see. This process would actually continue to repeat. Like the next one after this one would actually be an 80% return, which would be even smaller. So you can just, let's see what an 80% return looks like. This is, wow, that's like, it's tiny, right? That's an 80% return. That entire bit right there. So that's like going from like 70K-ish to like 120. So it's not even that much. It's like if you had $100, you would make $80. It's really, really wild. So if you were looking for relative stability or the lowest risk crypto profile, you'd want to go with Bitcoin, right? It's safe, it's relatively sound, like you don't need to worry about it. Like your returns are going to be smaller, but that's what you kind of get for the deal. Like you're aware that this is the deal, right? If you go to Ethereum, though, this is where it gets really interesting. Now, Ethereum I consider a blue chip. It's an altcoin, but it's a blue chip. And the reason I'm so hype on this is, look at the returns. We could see if Ethereum does respect the 200-week moving average, and that's a big if. We don't know because it's never done that in the past. Though you can see in Bitcoin, it also didn't do that, right? Like the 200-week literally stops coming. It just doesn't, doesn't form. But this is a completely different beast, Ethereum. And so maybe it has its own rules, and it seems like that's the case. Like this is the 50-week in the purple, the 100 in the blue, and the 200 in red. And you see that it doesn't actually follow these rules. What it does is it has an all-time high, then it crashes like some 93 goddamn %. Then it has an all-time high, and if we went from this all-time high, which is the next all-time high, went down 93%, we're at like 100. I don't know, what are we at? We're not. I mean, like it's pretty bad. We're at like $300. So can we expect to see an ETH at $300? That'd be absurd. I mean, if that was the case, it would be absolutely bonkers. And let's just see what that would look like if it was $300. If let's say it's 300 flat, let's see what a 2,000% return would be. A 2,000% return would be, where is it? Okay, well, this this is much more reasonable. The 2,000% return would take us up to $6,000 a coin, which is okay, cool. So like you could see how this would work out, right? Like you would go, ETH would come down all the way to here, and then bounce up and go up to there, about 6,000, something like that, and then repeat the cycle. Very interesting, because the way I have drawn it right now, and let me see if I can change the color really quickly. Well, you know what? I'm not gonna mess around. Well, no. The way I've drawn it there is if it goes down to this 300 level, which is a 92% retracement. But if it doesn't do that, and let's say it does respect the 200-week moving average, then it comes like this, then it goes up like this, and then it comes down like that, which is more reasonable. I don't know, right? Like I don't, and this is the big question. This is what makes this actually difficult, because if we knew clearly where it's gonna land, then we could plan it kind of like how Bitcoin works. But the problem with this is like, Bitcoin is much more predictable, right? And ETH is not. And the other thing that you probably want to remember, and I know that last point wasn't really a point, the other thing you really want to remember is everything bleeds against Bitcoin. And let's go look at that. This is market cap dominance. And you've seen Bitcoin's dominance just go from like, what, 41% to now 46% just in the last like several weeks. The reason is people are freaking out, right? People are tripping out that their ETH is like falling and all the other altcoins are falling. And some are definitely taking it into stablecoin, which is why you're not seeing this thing spike as hard right now. And back in the day, like back in 2014, it was really fully Bitcoin dominance, right? And then you had like things like ETH come in and really Bitcoin dominance fell. But in the bear market, Bitcoin dominance comes right back up, like 70% Bitcoin dominance, which means everybody owns Bitcoin or a stablecoin. That's what I expect to see now. I don't know if we can go back up to 70, but we're at 40 right now. I definitely see a 50%. So what does that mean for ETH? Well, it means that ETH's price could easily go past this red line, this 200-week moving average, right? Easily. It's only 30% away, about $600. Could easily shift below that because people will take all their money out. They'll switch it into Bitcoin. They'll switch it into a stable coin, and they just won't be in the market because it's too risky. There's too much volatility, right? And this is exactly what's going to happen to Sol and ADA and things like that. People are just going to take their money out and they're going to let it like kind of dwindle because they don't trust it, just like how I don't trust it. Like it's very possible that Solana now at least goes down to maybe $20. It's entirely possible, right? There's no support here. There's nothing for it to hold up. And what I mean by this is all of these charts are basically they're abstractions of the human mind, right? These are a bunch of traders, some bots obviously, but it's a bunch of minds and their behavior over time. That's what these charts represent. And you can see that around here, there's some psychological confluence, right? There's some psychological support, whatever that is. And there's a little bit of support here, but there's nothing between here and here. So it's entirely possible that, Sol goes back to $4.50. It's entirely possible. Like I would not discount it. Where I would say it's not entirely possible is Bitcoin to go below this red line, because you could see that people respect the red line a lot. And I'm going to speak in a different way. People respect the red line because this is a graph of people's minds. right? That's what it is. There's some bots in there, as we just mentioned, but you get that, right? People respect the red line. Sometimes people fall through when crazy things happen like COVID, but not all the time. So the question is, does ETH respect the red line? I don't goddamn know. Do I want to know? Yes. Am I going to figure it out? Probably. So I'm going to start, I mean, like, I could try to figure it out, or we could just wait and see, right? We can see what happens when it gets to the red line. We might even see some capitulation where it just flies through. Because even right now, we're still at what we were last summer. Like last summer, we were in this region of about 1,700. We're there right now. We're at about 1,821. We're in that same region, while Bitcoin has gone below that, right? Well, it's still hovering in that area, actually. Like we bottomed out at about 30,000 last summer, and we're back at 30,000 now. And we're still set to go a little deeper. We got to go down to like 22,000, maybe 23,000. So it's entirely possible that ETH also comes down to $1,000, which is the red move, the 200-week moving average, but then goes way down, like to 300. Not entirely feasible. I mean, not entirely impossible. I feel like I'm beating a little bit of a I'm repeating the same things over and over again. But you can also see that this was a 3 divide. This was an 18% gain. Divide that by 3. You got 6,000. Divide that by 3. 2,000. And the next one should be 666. Which curve is it going to be? I don't know, but I'd really want to know. I need to know, actually, because that's going to determine where I buy. Like if I buy here and the top actually ends up being here, that's not a big return, right? If I buy here at the 200-week moving average and the top actually ends up being here, that's a 500% return, which is a 6x, which is doesn't meet my investment portfolio criteria, right? I really want to either be here and go up to here, or go from here up to here. But it's really important that we figure out where our entry price is. I'm set on buying Sol and not Bitcoin, but these entry prices are what's going to determine that. And I think we'll have to wait and see. I'm going to do research, though, to find out what's going on. Aside from that, I don't have much else to say. The DXY has made a comeback, and that's going to bring equity prices, and it's going to bring commodity prices, all crypto prices down. And I think this is because the Fed is currently selling off assets. They've begun the process, and you can see it's tapering off, right? And it's going to start coming down. So what this basically means, I don't want to get too nerdy here. I'd like to keep this pretty evergreen, but basically what happens is the Fed is buying back assets from the bank, so mortgage-backed securities and T-bills. And so they're going to buy these things back. And when they buy these things back, the cash that they get, what they're going to do with it is, well, sorry, they're actually selling these. They're selling these assets that they have. And when they get the cash literally goes poof. The cash literally disappears. And then how that impacts society is there's less money in the economy. When there's less money in the economy, there's less ability to basically rent it out. I'm saying rent it out, but you know what I mean. It's loans, right? And so your interest rate goes up, and your economy slows down, and your EPS, earnings per share, comes down, and then you have investors freak out, and this is how you get a recession, which is exactly what we got here, right? Between February 5th, 2020 and March 25th, 2020, which is 2 consecutive quarters of negative earnings growth. I hope my definition there was correct. We saw the Fed do something like this between 2015 and basically 2018, but they got a little aggressive here. And I think they could have done quite well and really brought it down. But, they started seeing seeing what was happening, and they really had to jolt it up here. And I guess something happened in August 2019 for them to start purchasing assets again. But you see that we've purchased a lot of assets. This is directly correlated to the interest rate, and we're gonna have to sell these, sell these assets and get the cash and basically burn the cash, and that's gonna bring asset prices down. It's gonna bring everything down, including Bitcoin and the Nasdaq and the S&P 500 and potentially a recession, but unlikely a depression. I don't know if I have much else to say. I really don't want to ramble on. But let's just go see what the futures are saying. Probably down. Probably down. Oh, probably. Wow, look at that. Up, but just barely up. And Sheryl Sandberg was Facebook's adult in the room, but it's always been Zuckerberg's production. Well, she's out. I think she feels like the pressure. She's probably like, screw this. Like this ship's falling apart. Anyways, I hope you like my little presentation on returns and what I think about ETH. It's nice to know that I want to purchase ETH over Bitcoin, and I'm pretty clear about that. I will talk to you guys soon. Have a wonderful day.